Imagine buying shares worth lakhs of rupees and then losing the physical certificates in a fire. Gone, just like that. No proof, no money. Sounds like a nightmare, right? Well, that nightmare used to be real until depository changed everything. Today we are going to explore what a depository is, how it works, and why it's one of the most important system in the stock market. So let's dive in. Hey everyone, welcome back to Pradaksha, your go-to channel for learning finance in a simplest way possible. Whether you are a student, a beginner investor, or just curious about money, we've got you covered. If you are new here, don't forget to hit that subscribe button and ring the bell icon so you never miss out on financial freedom. So let's rewind to the early 1990s. Back then, if you wanted to buy shares of a company, you did not get a digital receipt or an app notification. You got a physical share certificate, an actual piece of paper. This certificate was your proof of ownership. But here's the problem: risk of loss or theft. If your certificates was lost, stolen or destroyed, you had a massive headache trying to prove you owned those shares. Slow and complicated. When you wanted to sell shares, you had to physically sign the certificate, mail it to the buyer, and wait for weeks for the transfer to complete. It was slow, risky, and expensive. Fraud and forgery. Fake certificates were a real problem. Fraudsters would forge signature and create duplicate certificates to steal money from the innocent investors. Storage nightmare. If you invested in multiple companies, you'd end up with dozens, maybe hundreds of certificates. Imagine managing all that papers. The 1992 Hasan Mehta scam exposed how broken this system was. It became clear that India needed a modern, secure, and digital solution, and that's when depositories were born. So let's move on to the definition of a depository. A depository is an organization that holds your securities like shares, bonds, mutual funds in electronic form. Think of it like a digital bank, but instead of holding your cash, it holds your investments. Just like you don't carry all your money in your pocket, you don't need to carry physical certificates anymore. The depository keeps everything safe in a digital form. Now let us discuss some of the key terms of the definition. That is securities. Securities are financial instruments like stocks, bonds, debentures and mutual funds that represents ownership or debt. Dematerialization. Dematerialization is the process of converting physical share certificates into electronic form. This is called opening a demat account, your digital locker for shares. Electronic form. Electronic form means your certificate exists as a digital record in a computer system, not as a paper. So, in simple words, a depository takes your paper certificates, scans and stores them digitally and gives you a demat account where you can see all your holdings anytime, anywhere. Now let's see how depository actually works. It's easier than you think. Step 1. Open a demat account. First, you open a demat account with a depository participant or DP. A DP is like a middleman. They could be your bank, a stockbroker, or a financial institution that's registered with the depository. Step 2. Buy shares. When you buy shares through your broker, the shares don't come to you physically. Instead, they are credited in your demat account. Step 3. Depository records the transaction. The depository maintains a digital record of who owns what. It's like a giant, super secure Excel sheet that tracks every shares transaction in the country. Step 4. Sell or transfer shares. When you sell, the shares are instantly transferred from your account to the buyer's account. No paperwork, no delay, no hassle. As you can see, the depository system is faster, safer and way more convenient. So when we talk about India, we have two main depositories that manage all electronic securities, that is NSDL and CDSL. NSDL stands for National Securities Depository Limited. NSDL was India's first depository, established in 1996, is the larger of the two and handles millions of demat accounts across the country. CDSL stands for Central Depository Services Limited. CDSL was set up in 1999 and is the second depository. Together, NSDL and CDSL manage nearly all the dematerialized securities in India. Both depositories work under the regulation of SEBI, that is the Securities and Exchange Board of India, which ensures everything is safe, transparent and fair. Now that we understand depositories, let's talk about custodian. They are similar but not the same. Let me explain. A custodian is a financial institution that holds and safeguards securities on behalf of large investors like mutual fund, insurance companies, pension funds, and foreign institutional investors. Think of a custodian like a professional bodyguard for your investments. They don't just store your assets, they also handle record keeping, settlements, and corporate actions like dividends and bonuses. In short, depositories are for you and me. Custodians are for big players managing crores and crores of rupees. Let me tell you a story to make this crystal clear. Meet Priya, a 25-year-old girl who just started investing in stock market. She opens a demat account with Zerodha, which is a depository participant linked to NSDL. She buys 50 shares of Reliance Industries. Within seconds, those shares appears in her demat account. A month later, Priya is traveling. She logs into her Zerodha app and sees her shares are safe even though she is miles away from her home. Thus the power of a depository. She decides to book some profit and sell 20 shares. The transaction is instant. The buyer gets the shares in their account and Priya gets the money in her bank account within 2 days. No paperwork, no physical certificate, no hassle. Thus how smooth and secure depository system is. Now let us look at some of the benefits of depositories. Safety and securities. Your investments are protected from theft, loss and fraud. Instant transfer. Buy or sell shares in seconds, not weeks. Easy access. Access your holding anytime and anywhere. No paperwork. Say goodbye to mountains of certificates. Transparent and regulated. Everything is monitored by SEBI to ensure fairness and transparency. And that's it. Now you know what a depository and a custodian are, how they work and why they are so important for modern investing. If you found this video helpful, give it a big thumbs up, share it with your friends who are learning about investing, and don't forget to subscribe to Credxa for more super simple finance lessons. Hit that bell icon so you never miss an upload. Drop your questions or topic request in the comment below. We read every single comment. Thank you for watching, and remember, finance doesn't have to be complicated. We are here to make it simple. So see you in the next video.